Hello, everyone, and welcome to the BBA Show. This is Adam Wyatt, aka AKWAnalytics, and as always, I'm here with Rich. How you doing today, Rich?
Hey Adam, how's it going, man?
Doing good. So you're joining us from a different spot than usual today, huh?
Yeah, I picked the worst possible time to go on vacation. I was in Canada for a little while, and now I'm down in Alabama visiting some family. But yeah, for like a week, the most volatile week of the Bitcoin price action in probably the last year and a half, I'm nowhere to be found. So I missed all of it.
Well, I mean, I think there's a lot of people that can relate to that just as far as Bitcoin goes because it trades 24/7, 365. So, everybody has a sense of what that feels like, how much it sucks.
Yeah, it's funny because I've noticed the guys in the Slack, a lot of them have these crazy sleep patterns, like 4 hours on, 4 hours off, that kind of, I don't know, it's just nuts. So I guess people are trying to adapt to Bitcoin, not the other way around.
Right. Yeah, exactly. I don't know if that's good or bad for health, but I assume it's good for the pocketbook, or they wouldn't be doing it.
Exactly.
So anyway, it's been 2 or 3 weeks since we talked, and there's been a lot that's happened. I think maybe last time we talked, Bitcoin was like maybe $450, something like that, mid 400s, and Ethereum was getting a lot of attention. It was maybe $15-20 at the time, and it was looking pretty bullish. And boy, did things really flip around there. The past couple of days have been a little bit volatile, but I mean, since we last talked, Bitcoin went up, $350 from those mid 400s up into that almost 800s, high 700s, and Ethereum, with the problems about the DAO, which we'll talk about in a little bit, has come off here quite a bit. In fact, it had like a 50% correction. I mean, it was $20, and then within like 24 hours, it hit $10. So, all a result of the Dow drain. So, anyway, there's a lot to talk about on that front. And then on the macro front, I don't know if anybody out there that isn't talking about the Brexit. Of course, that's the proposal for Britain to officially leave the EU. There's been a lot of politicking and scaremongering around this thing, and it's all the vote's going down tonight. So it's gonna be interesting to see how this thing shakes out.
Yeah, well, there's so much to talk about, so let's go ahead and dive in.
All right, so let's go ahead and start. I got Ethereum here, but I'll go ahead and pull up a chart of Bitcoin. But let's scoot back here a little bit out to the daily chart, and I mean, this really puts into perspective what's happened. Not only since the last time we talked, but just since the beginning of 2016, it's been a good year for Bitcoin, and we could use one after the past few years, that's for sure. So, there's lots of theories about what's causing this, and BBA is really a technical analysis firm. Mainly, one of the reasons is because it's so hard to figure out fundamentally what really drives these markets in real time. The technicals tend to tell the story much better. There could be an infinite amount of reasons why something's moving up or down, but that nevertheless, there are some fundamental things going on that might have an effect on Bitcoin, such as the aforementioned Brexit that causes forex concerns. You got China still a big part of this whole thing with capital flight and yuan devaluation. Having, of course, uncertainty around that, but positive and negative uncertainty, from the miners and from the hodlers' perspective. So we got a lot. I think maybe it's a perfect storm, all those that caused this latest run up. But what are your thoughts, Rich?
Yeah, I tend to agree with everything you just said, even more than just China, Brexit, having really the whole world, and I've been really focusing on this. The whole world is kind of just in a weird place right now, and people are looking to just kind of, I think at least, that people are looking to tap out of the current system, at least, even if it's just temporarily until things calm down. You're starting to see some interest, some global interest in Bitcoin. So I think that plays a part. I think the major role was and still is the halving. I think maybe market makers could be capitalizing on people's expectations, right? If they expect it to run up after the halving, then they're going to try to run it up beforehand to get those people to FOMO into it and then run it up even further. So it just becomes like this sort of mind game. So I think that could be a large part. But I do also believe that there are some macro kind of fundamental narratives that are playing a role here with Bitcoin, because you mentioned that it's getting, especially in China, just makes, I don't want to try to fit it into a narrative, but it just makes more sense to me that way.
Yeah, and I'm glad you put it like that, because that really makes it clear. And I agree that the economics always run ahead and drive things as opposed to the politics. You have all these macro things going on, these kind of macro political events and stuff happening. The economics really are what drive this thing. So I agree about the halving. That's really what's having the effect, in my opinion.
Yeah, and especially like I touched on the market makers, but it's just people in general. They don't know how to react. A lot of these people who are trading Bitcoin today, or at least even just interested in investing in Bitcoin, weren't around for the last halving, so they don't have like any sort of history emotionally, or any sort of like just anything to fall back on for reference sake. I mean, yeah, they could look at a chart, but I'm just saying, it just seems like this is new territory for a lot of people, and there's going to be people trying to make money off of that. So I think that's what's kind of mainly going on with this price run up. Again, there are other things too, but that's the main thing.
Yeah, I think speculation has been and still is probably the major driver for Bitcoin price right now. And I think you're right. You had this new money that sees potentially their opportunity to get in a new bubble. But at the same time, you have people that have been through 4 or 5 cycles, which then reinforces the cycle, right? So like, not only is new money going, oh, there's going to, maybe I can get in, but the old money's going, oh, here comes another cycle, easy money, right?
Exactly.
Yeah.
Yep.
So I think it's good. Overall it's good. Obviously I think this is a little excessive here, given that this happened in about 10 days here. So I think this pullback is healthy. We've been cautious for a little while at BBA. Certainly up in here we weren't buying, but this doesn't look like this is quite done yet to the downside. It looks like we might have a little bit more. Maybe the bottom's in, but anyway, it looks more like a healthy bull market correction than anything. I know that the crypto Twitter traders and all will make fun of that, but it really does look healthy. I mean, look at these volume. I mean, these are fat green volume bars down here. I mean, there's no denying that. So people were buying there.
Yeah. So do you have any kind of target, or are you looking to re-enter, or what's your thoughts right now on where this price could be headed, just so we can get an idea?
I mean, I think mid 5s is good. I mean, just generally speaking, depending on how nitpicky you want to get, mid 500s is probably a good place to get in, medium to long term. I mean, if you really want to push it, if we could wash down below 500 to like 480, that would be just back the truck up level. But I don't know if the bears can get enough juice to drive it down there. I just think right now there's probably too much momentum to the upside, given all the factors we just talked about, to really drive it down that low.
Yeah, I feel similarly, although, I wonder if, I won't use the euphemism that just came to mind, but I wonder if it kind of like jumped the gun, if Bitcoin jumped the gun a bit on the halving excitement, and maybe we see a pullback all the way down to the previous levels. Who knows? I tend to think the same as you, but it wouldn't be outside the realm of possibility to go back to where we were beforehand.
Yeah, I mean, if we look at this from a weekly perspective, I mean, we can see that we're right around these old levels where you would expect sellers to be here. But also, I mean, you couldn't ask for a better cup. If we were to have a cup and handle, the old TA pattern, I mean, this would be it right here. We could just cup out right here, and then that would lead to a break of the all-time high almost certainly. But I mean, short-term MA support. I mean, you got a lot of confluence and stuff. All these old highs, boom, 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 boom. All these rejections here. It seems like the market might want to test those, which is right in that 475, 480 area, you know, 460 maybe even. But again, that's kind of most bearish scenario in my opinion.
Right, right. Low probability, but good to keep an eye on. Maybe put a few buy orders down there.
Yeah, and I mean, don't you think, looking at this chart, if we really are, you know, by the end of 2017, which is right here, if we really are going to highs up here, I mean, we don't run it straight up right like this right from the bottom.
No,
I mean,
no.
we need a little consolidation. We need a little scare, so some scares, some fake outs down in here to keep this thing fresh.
Yep, I totally agree. Otherwise, it becomes like, well, that previous 1100, 1200 area, it just was like a huge run up and then a huge dump. So I don't like that. I like the healthy movement upward as we get more and more strength and stability. That's nice to me.
Yeah, absolutely. So I'm you know, so far I'm fairly comfortable with the dip. We always could play it a little bit better from a, you know, trading perspective, but no, I mean, generally we've kind of been right on this thing, and it's acting like it should, really. I mean, I guess you could say this rounded top's a little more bearish you'd like to see, but again, it's only a 4-hour chart. That weekly and that daily, you can't really see this. So
Sure.
you know, that's just to put some stuff into perspective. But so I mean, I think we're on the same page. Bitcoin might consolidate here for a while, maybe, you know, test the lows for a little bit, but you know, in general, this thing's going up later this year, right?
I think so.
I think so too. Yeah. So let's talk about something a little stranger, even than Bitcoin, which is pretty strange on its own.
I didn't know that was possible, but apparently it is.
Right. Yeah. But this certainly is, and this is the Dow. And I mean, about, I don't know, maybe 6 weeks ago, a month ago, we had been talking about this ICO, right? It was raised like 150, almost $200 million at one point when Ether was at its peak. So crazy.
Yep.
And so since then, you know, the launch went fine and it hit exchanges, and you can see that you know, it really just flatlined. I think nobody knew what to do with this thing. Like, nobody really knew how to value it. What is it worth? They have these weird conversion caveats back to Ether and stuff. So it was just chopping. The market makers were chopping it up. And these are big guys. I mean, this was a lot of money in this thing.
Right.
And then I think it was maybe, I don't know. I can't even remember. Yeah, I guess it was on this day, the 17th, which had been what's today? Last Friday, Thursday or Friday. I remember it was like a Friday. I think I woke up and I wasn't expecting much action in the market, and I was like, "Holy crap!" I had to get up at like 4:30 in the morning to follow this Dow thing. But essentially, what happened is they call him an attacker, but really he's just a hacker, a market participant who found an exploit in the code that allowed him to essentially legally, quote unquote, drain funds from the Dow directly, drain Ether directly from the Dow into his own wallet via these things called child DAOs, which we won't get into because it's too technical. But anyway, this guy ended up draining like, what was it, 3.5 million, like $50 million equivalent worth of Ether in practically no time. From the $150 million. So I mean, that's a third of it. Boom, gone.
Yep, just gone in thin air. Well, not in thin air, into this guy's bank account.
Right, his wallet, man. He's got him. So I mean, then it would come to find out that these exploits were kind of known before, and maybe there might have been some oversight on the part of the Dow guys, and maybe the Ether. Who knows? Yeah, it was all bad, but we could see what it did to price. Obviously, any kind of hack or a theft or exploit or anything happens, it's a self first, ask questions later kind of scenario.
Exactly.
Yeah. So anyway, this thing's still ongoing, but the market's kind of recovering here. We can see what it did to Ether as well. But the kind of the point is that just because it's code, it's a quote unquote contract, doesn't necessarily mean it's perfect.
Right. And so let's talk a little bit about this sort of half recovery we've seen over to the right of the chart with, this green area. It doesn't really make sense to me why it would just recover like that when it's so vulnerable to being just drained. So I did a little research, and what I've come across is that there's all these proposals to somehow either like soft fork to get the money back, or I don't know. Are you more up to date on this? Like, what's going on here? Like, why would this recover so quickly?
Yeah, well, the nuances of it I'm not as familiar with, but I will say that as far as I understand, there's essentially two camps: fork or don't fork. The don't fork crowd say, look, what the Bitcoin crowd would say, look, what's done is done. This guy got the funds fair and square. This was an oversight again on y'all's part. If we want the money to stay fungible, we need to let this person or organization keep the funds. That's it, period. And we move on and we learn from it. And then there's another camp, which seems to be a lot in the ether camp, who say we want to fork this. Essentially, it's not a rollback necessarily, but essentially what they would do is either freeze the funds to make them unusable by the attacker, or
so like blacklisting.
Yeah, like a blacklist kind of thing. So those funds couldn't be spent anytime ever, or something like that. Or I mean, maybe there's some kind of a rollback element to the fork as well. But anyway, essentially what it is kind of making this this smart individual pay for the mistakes of the developers in the community. So,
Right, and trying to make whole again the victims, which the sentiment is nice. I have a lot of compassion for the people who invested and who put their trust in these people, maybe to their own, obviously to their detriment, but not really intelligently trusting these people, if I may say so, because like, let's be honest, we had no idea what could happen, and we're talking about computer code, which is vulnerable to bugs, and here we go. So that said, though, like, it sucks when people lose a lot of money like that. That's really sad. But dude, if Ether or DAO, or if they ever want to be some kind of monetary unit, some sort of medium of exchange, this is not the way to do it. It will, in my opinion, it ruins all credibility. And I'm in agreement with the Bitcoin crowd that's saying, like, look, just what's done is done. Just take it on the chin, learn from it, and get better.
Yeah, I mean, so in my opinion, I agree with all that. But I mean, if we look back at Bitcoin's history with thefts and people losing money, so the DAO guy just found a piece of the code that was legit, and just was able to take money out of the thing. Like, that sounds perfectly legit. Like, Mt. Cox stole almost $1 billion from people. Now, if you were going to roll back something, you'd probably want to roll it back for something like that. If that was even on the radar, it feels like it would be more suited for an incident like that, rather than just a screw up essentially in the programming of the software of whatever's happening here. So, I guess I feel bad for people who lost money, but this is a highly experimental project, the first of its kind. People that put enough money to really be damaged by this thing learned a good lesson. They didn't lose it all, so just take it for what it's worth.
Yeah, like the people, and I don't know if this is true or not, if it's just hearsay, but like the people who put their life savings into this, you're
asking for it. You're asking to get it taken. I mean, that's just even Bitcoin, anything, any kind of high risk investment like this, it just has to be a minute percentage of your overall wealth. You'd hope we'd know that by now in Bitcoin 3 or 4 years later, after all this stuff has been happening for so many years.
Absolutely. So one last thing I'd like to say is this to me just only makes my feelings about Bitcoin even stronger, because we've been through this not only just on a level of like having to trust exchanges and all that stuff, but now the Bitcoin code is at its strongest, I think, just because it's been around the longest. It's got the most the most amount of programmers working on it, eyeballing it, checking it, making sure it's still in good shape. So to me, it doesn't make sense to keep restarting and rebuilding the wheel over and over again when it's there, and we just by building upon that, the strength of the blockchain and the longevity of it, and sort of what we know is already, well, it's the most secure in terms of the code and in terms of the security that the miners provide to the blockchain. Like, it is the strongest. So I would lobby for stopping the nonsense with all these, I'd say frivolous blockchains, and get to the one that has the most security. It just doesn't make any sense. It's irresponsible to do something otherwise.
Yeah, I mean, and this kind of that brings up an interesting point that I talk about on the Slack sometimes. I don't know if I've ever brought it up on the show, but that I know a lot of Bitcoiners refer to. That's the Lindy effect.
Yes.
Yeah, the Lindy effect being that essentially for every day that something has existed in people's minds, it becomes exponentially more probable that it exists in the future, right? For every day, there's like an exponential curve. This is for every day that additionally that it survives, and people see that it survives, it adds, exponential amount of days to their expectation of how long it will survive. And this
exactly
to safe haven asset prices is like a big kind of thing in some economics.
It's why gold has the attraction that it does.
Yeah,
it's been around for thousands of years.
Yeah, right. And so and that's safe. That's very safe to people. So not only is Bitcoin orders of magnitude more secure than anything else, and is better money than anything else at this point, more trusted, more used. I mean, everything about it is better, but also as as it emerges as this financial asset, which I think is happening now, this idea of the Lindy effect and it just being used as a place to store wealth that's uncorrelated to other things is very important.
Yes.
Yeah. So I think we should focus on that as well.
Exactly. I couldn't have said it better.
Yeah. So awesome. All right. Good. Well, that's a good crypto talk. Hopefully that caught some people up to the happenings, and then we'll pick it back up in a couple of weeks. Hopefully when Bitcoin's at $18,000 a piece, right?
Oh my gosh, I can only hope.
Right. So before then, though, the people of Britain have a big decision to make, whether to stay or leave the EU. I'm sure you have an opinion. I certainly have an opinion about what they should do, as I'm sure everybody does. But why don't you just give us some thoughts, and then I'll tell you. Well, actually, I'll start. I think they should leave.
I'd like to. Okay, thanks. Yeah, I think they should leave too. All right, that's settled.
Good, right? Okay, yeah. I think most Bitcoiners ideologically relate to the leave camp much more than they do the remain camp.
Sure.
And but there are some short-term economic and financial things to take into consideration on both sides.
Absolutely. Yes. So just real quick, clearly we both think they should leave. And I do think up till last week, I don't remember exactly what day it was, because I was, in the midst of not having internet. And so I was kind of got lost in it all. But I did hear a touch of news about the awful, terrible event that happened where the British member of parliament, who was pro sticking to the EU, she was just tragically assassinated, murdered in her office by a gentleman who wanted Britain to leave, and he was angry, upset with this lady who was advocating for Britain to stay, and so he walked into her office and killed her, and that's awful. And just the strangest, most absurd thing happened. The market took that as good news, which just blew my mind. Up to that point, Brexit was pretty much on the table. The polls, it was polling more and more likely, and then that happened, and then it just kind of fell off a cliff, and it looked like, I don't know if it were high frequency trading bots or hedge fund managers or whomever, but they immediately jumped into the S&P and just have driven it up. Let me give you a quick screen share here so you can see what I'm talking about.
Sure, yeah, pull it up. My thinking is that what the fund manager, what the investors were thinking is the public is going to view this as the leavers are a bunch of maniacal British loyalists, or that combined with the fact that there's a week left, which is kind of a critical period of time until the vote, and then they go, well, now the leavers look like a bunch of crazies. Now, definitely the Remain is going to have an edge going in, and that really got solidified this week. It still was kind of wishy-washy late last week, but yeah, I mean, it's it's a pathetic commentary on where we stand.
It is. And, all the economic arguments and all the, logical and rational arguments for leaving, they all go out the window when something like that happens. And, it's unfortunate because I think Britain could benefit from leaving, absolutely could benefit from leaving the EU, but it kind of gets put on hold because of some, crazed asshole who decided to take matters into his own hands, does something awful, and now he puts what I would call progress of breaking up the EU on hold.
Well, I think I agree, but I will say that there were also a lot of Liam Neeson and Bono and a bunch of British celebrities have been coming out in this propaganda campaign recently to Remain, and so not only was there this horrific attack, but also there's just been this media blitz of people saying either A, you're crazy if you don't vote for Remain, and B, you'll be responsible for an economic calamity if you do.
I hadn't picked up on that. Man, that's even worse. Not even worse than the assassination, but it's just what a crazy world we live in sometimes, man. But so I was going to show you this.
The market goes up. This is what I'm laughing at. The market here. The market just rocketing up.
Exactly. Can you see my screen? You can see it.
Yeah. Yeah.
Okay, good. So I put on a short just in my personal portfolio right here. Sorry, I don't know why this thing keeps popping up, but right in this area, and it actually was going really well. You see the candle came down, and this was around the time it was polling the strongest for Brexit to happen, and then the assassination happened, and look at all this movement, just boom, shot right up, and here we are at tops again, around all-time highs almost. So man, that's just nuts to me. Yeah.
So a lot of people think if Remain wins, that's the breakout. That's your buy signal to buy the breakout above that 2132 high or whatever it is.
Yes. Yeah, and I would say the same. Another interesting fact that you actually just posted in the Slack that I was going to touch on was Peter Brandt posted something on Twitter that reminded me that hedge fund managers in the EU, they get to run private polls on what what their investors or potential investors, people in their circles think will happen, and they don't have to publish those results. But yes, exactly, and they don't have to post the results. So what happens is, what I think we could be seeing here is people taking maybe some of these hedge fund managers taking their results and buying S&P is in anticipation for a no vote and all-time highs being broken here. So I think that could be what's happening, or at least playing a role. So that's what I'm leaning towards right now.
I agree with that. So if there's maybe an indirect impact on the S&P, there's certainly a direct impact on the Forex markets.
Yes, exactly. So let's look over at the euro, which I've been keeping an eye on the closest here, because I thought that if there was a no vote, the euro would take a big dip. If there was a yes vote, we could have our chance to get back into this OTE for a nice short, because I do still, as always, I'm going to talk about the dollar till the cows come home. We have I think we still have a shot for euro to come to parity with dollar eventually. So I'm looking to put on a short here. We just pierced our OTE. We see a candle just coming up in here. So I look forward to climb a little higher. I've got a stop up here around 1.157. And so I'm going to hold tight, and I'm aiming for 1.055-ish area, 1.056, somewhere in there. And that's, I think that happens over the long term, but I'm willing to hold out until I get it. So, but yeah, so like I said, we've pierced the OTE. I think it's a good time to start. If you're interested in the trade, maybe nibbling here.
Okay, so just so that we're clear, I don't even know if I'm really clear. So a no vote meaning no means they leave, or no means they stay?
Oh, sorry. Yeah, a no vote meaning that that Britons stay, they don't leave.
Okay, so they say no to the Brexit, like they say
Yeah,
no to
sorry.
leaving.
Maybe I said it backwards, but that's what I
Yeah,
meant.
that's fine.
Yes.
Yeah, that's good. So then that would, what would be the implication for sterling and in turn euro? Why do you think that the euro on a no vote would do that and not something else?
Well, I think the euro strengthens on just purely perception and speculation. I don't think any of the fundamentals have changed, but you have these people calling, like you just said, all the propagandists who, are out there harping on, Britain staying in the EU, right? So it mainly comes down to perception. And if the perception is that the euro is going to stay, quote, strong by Britain remaining in the EU, which I do believe that Britain staying is a nice pillar for the EU to stay afloat for a little longer.
Yeah.
Because if they pull out, EU could probably start to slowly sink into the sea, which it should, but that's a different conversation. Yeah. So I think it's purely perception, and the perception is that, okay, EU is going to remain strong, and these traders are going to try to take advantage of that by buying the euro as a sign of strength.
And also, you think some of that euro strength might be spillover from sterling, right? So if people are scared and they're selling their pounds for euros, absolutely, and that would put added upside pressure before the event on euro.
Absolutely.
Okay. Yeah. Okay.
Yeah, that's a great point.
I got you. Okay. Yeah. No, I get it. That makes sense.
So I'm not actually playing the sterling side of it. I'm just playing the euro side of it. But there is a possibility with all of that that attention from the sterling plus the speculators who are playing the perception. This could blow right through our OTE and into our stop area. I mean, it really could. I think it's possible, but for now, I'm sticking with fundamentals as much as that has not really worked for me lately.
I was going to say, just I agree, stick to the plan. But I will say that just as a technician looking at that market, it looks like that 116 is just itching to be just washed and then dumped. Right?
Yeah.
So yeah. So I mean, I could see him just ripping that thing up to 116, take everybody out. Nobody thinks it's going to 116, and then take just almost like 2 or 3 ticks over that high with that spike high just above 116, that last one. Then they dump it. I mean, then it goes all the way back down to 105.
Interesting.
Yeah.
Well, then I'll keep that on my radar because I want to make sure I'm in the move, but I also don't want to misplay it. So maybe I could reevaluate the entry level, but for now I'm going to stick to it until I have a chance to really look at it and see how I feel about it.
Yeah, do it. And I mean, as far as you just price action will be key, and we're talking about a daily chart. Those, that's 2,000 pips away from 14 to 16. So I mean, there's some room to evaluate what's happening in between there.
Yeah, absolutely. And I mean, if we run up to 116 in a day, well, that's just nuts. And I don't.
Well, then the world's falling apart. Something is wrong.
Right. Something is just terribly wrong. So I wouldn't be too upset if I got. Yeah, you're right.
Look back in when it dumped in like one day from like 114 down to 112 or 111, whatever it is.
Yeah, or like right here from 105 up to 109. So it's nuts. But this is why it's tough to play these markets, because you are a small little fish in a huge pond of people who have lots of money, and they will rock your world. So you do not want to be on the opposite end of that if you're playing with lots of money.
Well, especially in Forex, that's the big boys pond, certainly. And I know we wanted to wrap up with banks, so it's that's a good transition. The Forex, we can actually get an edge in stocks because there are fundamentals that are released to the public that we can then evaluate.
Right.
So that's it's actually just for people who just kind of trade casually. Stocks are actually a good place to go. Most of the time, people look at the fundamentals and determine if they're good or bad, and they want to buy the stock. We're doing the opposite with the European banks, and seeing how bad the fundamentals are and how much lower it could go.
Right,
So,
right. So
yeah.
it's so backwards. But yeah, let's look at this. So this is Credit Suisse. So we talked last time, or I don't remember if if it had already broken this bottom range when we talked, or if it was about to, but it did. It clearly broke down right here. And I mean, I was certain, especially if the Brexit were to take place, this thing could go pretty low. I mean, I think we were right at the bottom of the trading history. I don't know, my chart's not one to help me out here. So,
Yeah, that's right.
anywho. I think we're reestablishing the trading range for now. I think a lot of this is the weak hands who are holding the banks are jumping back in because the Brexit is less and less likely now. And so Credit Suisse has reestablished the trading range between this top and bottom.
Yeah.
Go ahead.
That's I mean, that is classic, what's called a kickback. Also known as a fake out breakdown, kind of within the Wyckoff model, which I talk about sometimes again in the Slack.
Yeah,
The Wyckoff model, that's how a massive bull market gets started, is with a kickback out of the trend like that, and then a rip back up all the way back up through it. So I'm not saying in fact, I think statistically you're probably right, but if it breaks back above that upper trend line, watch out. It will be massive short covering rally. It could double.
Wow. Wow.
Yeah. So
that's interesting. So we could see. All right, I'll keep an eye on that too. Then, if we break through this top boundary, we could be in for a ride.
See you later. Because I mean, you're right. On that breakdown, we were all like, "This is it," right? I mean, they're in trouble.
Yep.
We're going lower, and those are usually the moments when, the swing traders, the guys who try to get in, the medium-term trades for, a couple months, that's when they like to strike, just when sentiment is abysmal. But I don't get, maybe they only have enough juice to get it back to that trend line, and then the sellers come back in, the fundamentals are just too poor. But again, just beware. If they break that top trend line, watch out.
Yep, I'll definitely be watching that then. I appreciate the heads up here.
Yeah.
But yeah, you're right. As soon as it got down to here, I guarantee you so many people were starting to put on shorts. And that's a funny way to put that. But anyway, and then
finally.
Yeah, finally, they've been wearing underwear this whole time. They finally put on some shorts. All right. But all right, sorry. Let's so yeah, I think you're right, could see some short covering that could drive this thing back up. I'm interested to see how this plays out. And the other one was Deutsche Bank. So they did the exact same thing, which this was a tighter trading range before it broke down. And man, I don't think I've ever been so certain that this thing was headed way down. And I was just totally like mortified when I saw that this thing had broken back up and continued the trading pattern. But I think that's a signal to me that a lot of people who were shorting this thing or selling it, they were paying attention to the Brexit, because I do think if Britain left or leaves, it's not off the table yet, the EU, that's going to put these banks in some trouble, or at least it could really affect them negatively. So I don't think it's over yet, but I'm watching these boundaries here.
Yeah, and just we'll finish up real quick. We're breaking up a little bit. I think the connection's getting a little bad, but that's fine because it's actually good timing. But this chart actually is not as technically clean in the other one, and I wouldn't draw the same conclusion on this one. This one actually looks worse, because essentially this third low right here, which was the kickback on CS, was really just a retest of that initial low and just a little stop run of it right there, and then it's popped back up to the top of that downtrend line. But on this one, even if that upper trend line breaks out, I still wouldn't say that this has a potential to double, maybe a little bit more, but just at a glance, Deutsche Bank still looks much worse than Credit Suisse.
Okay, good to know. Good to know. Thanks, Adam. I appreciate your input there.
Yeah, man, for sure. So you got anything else today before we say adios?
That's all I got, man. Thanks for having me as always. I've always enjoyed the show.
Awesome, man. No, as usual, it's been great. Thanks for joining us from down in the dirty, dirty South down there. And and hopefully I'll see you in Philly next week.
Yeah, for the fish show. I'm looking forward
That's
to it.
right,
Not that I'm
man.
going. I wish I was, but we'll catch up. Sounds good, man.
That's right. All right, everybody. We'll see you next time in episode 12. Cheers.